This lecture covers Chapter 13, The Cost of Quality. All of the principles of quality costs and cost management applied to business and industry today can also be applied to the economics of laboratory medicine. Laboratory managers often have a limited understanding of the costs associated with quality improvement processes. This knowledge is vital to making operational and financial decisions to ensure high quality laboratory services. Following successful completion of this chapter, the learner will be able to discuss the relationship between quality, cost, and variation, name four types of quality costs, identify at least three examples of each type of laboratory quality costs, describe the division point between the two types of failure costs, explain what happens to the total cost of quality and why as the issue or problem progresses through the laboratory's path of workflow, and diagram the financial relationship between prevention, appraisal, and failure costs. More objectives of this chapter include summarize the concept of using an iceberg to describe quality costs, explain how management can use prevention and appraisal to improve quality and reduce cost, locate prevention, appraisal, and failure costs on the laboratory's budget, illustrate the three components of a charge for a laboratory test. Name at least five quality indicators for which failure costs could be tracked. Given direct labor and supplies costs and the margin, calculate the failure cost for a given indicator, and paraphrase at least five actions management can take to reduce failure costs. Quality costs may be seen as the cost of preventing quality problems, the cost of measuring, controlling, and/or inspecting quality levels, and the cost of failing to accomplish the desired quality levels. Quality cost can also be defined as and represent the difference between the actual cost of a product or service and what the reduced cost would be if there was no possibility of substandard service, failure of products, or defects in their manufacture. Study the overview of quality cost with laboratory examples. If errors or problems occur downstream, they are much more expensive to detect and correct. Therefore, these problems could compromise the quality of laboratory services or patient safety. Some examples of laboratory prevention costs include quality planning, supplier capability, validation of laboratory processes, preventive maintenance, work process training, quality management system, and quality improvement activities. Quality planning is the time spent by the laboratory's management team in periodically reviewing the status of laboratory quality, following up on documented laboratory quality objectives, develops a focus on quality and a vision for what to strive for in the coming year. The same is true for establishing responsibilities in agreements, where the laboratory will provide laboratory services to physicians' office laboratories or other laboratories. The same applies for validating laboratory computer system functions. Preventive maintenance programs ensure that instruments and equipment will perform as expected when needed. It prevents costly breakdowns that compromise the laboratory's ability to provide timely service to users and patients. The time spent in training new employees in their respective work processes and procedures, whether they have previous experience or not, is called the work process training. It ensures initial competence to perform independently for uniformity in work completed. Quality management system is maintaining an effective quality management system cost far less than having to repeatedly respond to customer problems and inspection deficiencies. Quality improvement activities. Time spent in acquiring quality skills, teaching staff about quality concepts, attending quality improvement meetings, and participating in improvement projects. It contributes to preventing problems that negatively affect the quality of services provided to users and patients. Appraisal costs are considered good quality costs because the related activities help the laboratory catch and correct nonconformances before they adversely affect the quality of laboratory service or patient safety. Ongoing competence assessment. Verifying ongoing competence of staff to perform their assigned task correctly ensures that personal variations can cause nonconformances does not creep back into staff performance. First, equipment calibration. Money spent in time, calibration materials, and calibration instruments ensures that equipment and instruments are measuring accurately, thus providing accurate test results. For example, instrument warnings or flags, absurd values, delta checks, critical values, etc., which ensures only accurate results are released. Use of quality control reagents and materials is required on a scheduled basis for all analytic methods. This quality cost needs to be inherent in every laboratory budget. Laboratories are required to pay for participation in inter-laboratory proficiency testing programs to verify performance comparable to that of their peers for the same instruments and methods. This quality cost needs to be inherent in every laboratory budget. The laboratory is required to measure how well its pre-analytic, analytic, and post-analytic processes are working and take action to reduce or eliminate any identified problems. Internal Audit Program. A program of internal audit of management and technical processes verifies that requirements are being met. Internal audits trace laboratory samples or records through pre-analytic, analytic, and post-analytic workflow processes. It reduces the cost of responding to customer issues and inspection deficiencies. Outside accreditation assessments. Regulation requires that the laboratory obtain and maintain successful accreditation from specified accreditation organizations. Such assessments are conducted by persons outside the laboratory trained to review objective evidence that the laboratory meets applicable regulatory and accreditation requirements. External failure costs occur when the products or the provision of a laboratory service to a customer leaves the laboratory's control. Internal failures are those caught and corrected before they adversely affect customers or patients. With internal failures, operating funds have been expended and wasted because the activity was not performed correctly the first time. Misdiagnosis, bad quality costs are the most expensive and hard to measure because they include both actual and intangible costs incurred to correct a nonconformance that has reached the customer. It's easy for management to blame workers for making mistakes that lead to failure costs. Workers are not the issue, processes are. The best way for management to remove the cost of poor quality is to improve processes that have problems by prevention and appraisal. Figure 13-2, failure cost as a function of detection point in laboratory processes. The cost of quality for a given issue grows larger as the issue progresses through the laboratory's path of workflow toward the user or customer. From prevention through measurement, detection, follow-up, and possibly to litigation, each level results in a significant increase in quality cost, said to be as much as tenfold increase at each level. Not all issues make it to the litigation stage. However, all issues increase in cost every time they move forward. A graphic representation of this concept is presented in this figure. Figure 13-3, the iceberg of measured and hidden quality costs. Another significant aspect in looking at laboratory quality costs is that many are not obvious. These are called hidden quality costs and often represent the amounts of easily measured laboratory costs. An iceberg analogy is often used to illustrate the concept of 10% visible and 90% hidden. The tip of the iceberg represents easily identified and measured good and bad quality costs, while the remainder of the iceberg under the surface represents many of the really bad quality costs in laboratory operations and service delivery. Figure 13-4, the components of charge and cost. This figure looks at the sum of quality cost from the perspective of a single laboratory activity. First, there are the acceptable real direct cost of labor and supplies. Then, there are the unseen failure costs buried in the budget that add to the real cost of production to generate the actual cost of production shown as waste. Also added is a margin. In the laboratory environment, the margin helps offset direct operating costs and provides revenue to the laboratory's owner. In the laboratory environment, margins are often added to charges for phlebotomy collections, laboratory tests, and anatomic pathology services. The sum of the actual cost of production and the margin becomes the charge to the customer for the product or service. The cost of failure is built into the charge. Reducing or removing cost of failure represents the opportunity to increase the margin or profit if the charge stays the same. The best way to reduce the cost of failure is for laboratory management to devote money and time into the good quality cost, that is, prevention and appraisal. In addition, the items listed on this slide will help reduce the cost of failures. Please review the definitions of these terms on page 353 of your textbook. This lecture has covered the cost of quality and its impact on laboratory services. The good quality cost of prevention and appraisal efforts lead to reduction in the bad quality cost of laboratory errors and dissatisfied customers. The strategy for using quality cost is simple to understand. First, directly attack internal and external failure costs and attempt to drive them to zero. Second, invest in the appropriate prevention activities to bring about improvement. Third, reduce appraisal costs according to results achieved. Fourth, continuously evaluate and redirect prevention efforts to gain further improvement.